this video, we're going to follow up on two questions that we got regarding our Tesla recommendation. One question was, when do we get in? Where do we get in? And that's a great question, of course. And the other comment wasn't a question as much as a comment that said, hey, I think it's going to go to 80. And I wrote back and I said, well, that's a possibility that could happen as well. So let's talk about these two questions, and I will go ahead and answer them in this video. First, we're going to answer the what if it goes to 80 question, or I believe it's going to go to 80. And then we'll address that, and then we'll answer the question, where do we get in? All right, so let's talk about, and we'll just quickly review what we talked about in our last Tesla video, where we were talking about the Elliott wave. And we just came in very quickly, and we identified the fact that we had a flat top up here, and then the market went through three drives. But what we're looking at here is we're seeing a three-drive pattern. So this is called an Elliott wave. And an Elliott wave, if we remember, is nothing more than two A, B, C, D patterns overlapping. So let's show how that works. So this would be your A, this would be your B, this would be C, and then down here at 61.8, this would be your D point. All right, so that's A, B, C, D. Now we know that this is where these markets break because of the blue lights. Okay, the blue lights come from the Bulls and Bears tool on the platform I'm using. And the platform I'm using has these blue lights that tell you where the markets break for these ABC patterns. So this is where this comes in, and this is helping us count the Elliott waves. So we get one A, B, C, D, and then we get another A, B, C, D. Now again, an Elliott wave is just two A, B, C, D patterns in a row. So we just go A, B, C, and we get the next drive down. So that's three drives. Now, right now, you'll notice that this second A, B, C, D down, which is three drive pattern or two A, B, C, Ds in a row, right here, this is hitting what we call the Fibonacci golden ratio for the extension side. Now, many people have heard the golden ratio for the retracement side, which is 61.8, that a market will have a tendency to come down and then retrace half or 61.8% of the last major move, and then it'll come down and retrace half or 61.8 of the major move. I call it the Fibonacci sweet spot. So it comes back into this region here, which is the Fibonacci sweet spot. And Tesla's been doing this like a train on rails. Okay, so it came back, and right here it bounced off. It didn't quite go up into the Fibonacci sweet spot, but it bounced off the 61.8 on the downside and came down and made our three-drive pattern. So we're in a perfect three-drive pattern. Has it bottomed out yet? No, it hasn't. And so is the comment, hey, I think it's going to go to 80, is it valid? Yeah, of course, and still could be within the parameters of the Elliott wave. So let's come down here and mark off 80. All right, and I don't think that's too much to ask for Tesla to come down into the $80 region. So there's 80. So that would be our commenter's target price, which is still part of the third drive, right? And so the third drive, this is drive 1, this is drive 2 right here, and then this is drive 3. And so these are our counter trends in here, counter trend 1, and then we got counter trend 2. And so we're still in the down drive. We haven't broke the blue lights yet. So this could easily come down to 80. It could come down, a lot further. And just because an Elliott wave is generally three drives down, doesn't mean it can't go to 4 drives, 5 drives, 6 drives, 7 drives. It certainly can. It's just very uncommon. Okay, so remember, an Elliott wave is designed and set up to give us the probabilities of a trade. So the probabilities are, once we get down into the second and third drive, this is where the markets have a higher probability of retracing. It's not a very high probability to get a fourth drive, but it doesn't mean it can't do it. It certainly can, but it would have to break those blue lights, turn around, go back up into the Fibonacci sweet spot, right? Just like we talked about before, if we come in here. So we're going to come in and we're going to make a projection. Okay, A, B, C. This would bring us down to 161.8, which is a golden ratio within the Fibonacci sequence, and that would put us right down here at that 80.93 level, or that $80 level. So that's very doable. That's not out of the question at all. We're sitting here at 130.9 right now, and we haven't broke the blue light. So how far down can it go? Well, it could go all the way down to 200. It could go beyond that, but we want to see it break those blue lights to consider it the bottom of the third drive. And that bottoming out, when it bottoms out down in here in this region somewhere, this would be considered a Wyckoff spring, right? That's what we call it. If you've ever heard of the Wyckoff theory. If you haven't heard of the Wyckoff theory, go out on Investopedia and search on Wyckoff theory, and then you can learn a little bit about Richard Wyckoff's theory of the Wyckoff spring. And the Wyckoff spring is kind of an older term of the way we used to call this, based on his theory, but now we just call it we call it a head and shoulders bottom formation. So let's go ahead and clean up the chart, and we're going to look at this one more time. So at the bottom of the three drive pattern, we're going to look for what we call a head and shoulders formation. So this would be your head and shoulders. That would be your left shoulder. This would be your neckline. Down here, wherever our market ends up coming down and bottoming out and giving us that Wyckoff spring, We would then get a rally up, which would give us the break of the blue light, and then the market would come down, give us that right shoulder. And then what we're going to do is we're going to extend out that that neckline. This is the neckline of the head and shoulders formation, and it should go along with the natural trend line of the upper region of that downtrend. And so this is the next point we'll be looking for, is up in here when it breaks those blue lights. Now, where's it going to break the blue lights? Nobody knows, right? We don't know where the bottom's going to be. It could be down here at 80. It could be at 65. We don't know. We're just going to wait for it to go. So to answer the question, where do we get in? We get in when it starts to rally off that right shoulder. So we get it to come up, break those blue lights. It's going to come down, make a little ABC pattern in here, not break a new low. It's got to stay above it. If it goes down and breaks a new low, that's a fourth drive, which is real rare. We don't generally see 4 drives, but it doesn't mean it can't happen. It certainly can. And, at the bottom of the 4th drive, we could try again. But what we're going to do is we're going to wait for that 4th drive or that right shoulder down in there, and this is where we'd be a buyer. So when the market comes in and starts to rally and breaks above right in here, now I like to buy it on the pullback and then the first bar to make a new high. So the first green bar to make a new high down here off this right shoulder. This is where I want to be a buyer. And I want to see the blue lights kind of come in here at the same time and cross over mathematically. So I get a crossover down in here, and this is where we'd want to start taking a long position. Now, we've got a lot of negative economic news coming out. So do we think that Tesla's going to turn around and rally and turn around? This is going to be the all-time bottom for Tesla? It might. We don't know, right? Technically speaking, we would expect it to come back to half or 50% back into that Fibonacci sweet spot. So right up in here would be our target goal, up in this region here. So at least bouncing off 38.2 before it turned and fell once again. And that could possibly happen, right? Or it could, get a little bit more strength and go up into these Fibonacci numbers, as markets oftentimes do, go up to 50 or 61.8. Now, it's not going to go up there straight up there. It's going to make an ABC pattern up in there too, right? So we're going to get a little ABC, but this is kind of what we're looking for. We're looking for this turning point at the bottom of the 3-drive pattern and looking for the retracement. Could it go down to 80? Absolutely. Could it go down further? Absolutely. But this is the pattern we're looking for. We want to see it break those blue lights, give us that head and shoulders, right shoulder bottom, break the neckline and start to rally once again, and these would be our buying points.